Now, services trade has emerged as a significant opportunity, accounting for 67% of global GDP, which is more than agriculture and industry combined, according to the World Trade Organization.
As a result of major technological advances, they are now at the heart of economic transformation. And to explore this market shift, the financing opportunities available, and the future of trade, we're joined by Vivek Ramachandran, Head of Global Trade Solutions over at HSBC. Hello, Vivek, and good morning. Welcome to Sibos TV.
Morning.
It's great to have you here, sir. Now, in the face of shifting macroeconomic landscapes, how are businesses reimagining their strategies to stay ahead in the global trade game?
So, roughly 20% of all trade makes its way into the US. And the US has been the bastion for free trade. So the average company importing into the US has never had to deal with the duty bill. That changed quite quickly. So the first real challenge for companies is figuring out who's in their supply chain, because it seems surprising, but in 2025, there still isn't enough visibility into supply chains and figuring out your duty obligations. The second immediate pressure we've seen companies deal with is working capital. So a 20% tariff is not easy to consume, and you don't have necessarily enough margins to absorb that. So companies are trying to get as much value out of their working capital. Strategic decisions as to where you base your production facilities, do I change my supply chain, are still up in the air. The dust hasn't settled, so companies are working through that. I think it's pretty fair to say global trade is not going to go back to what it was.
Vivek, with services trade booming, what innovative trends are actually redefining how we perceive and engage with global markets?
Services trade is 25% of global trade, but as you mentioned up front, it's 65-70% of GDP. Right? So we expect services trade to continue to outpace goods trade. That's got two big opportunities. The first is companies who manufacture goods are now starting to, quote-unquote, servitize them, which is charge on a pay-as-you-go basis and actually change your business model. The second, the moment you do that, is your cash flow stream changes completely, because your manufacturing costs are typically upfront, but you monetize this over a long period. So we, as a trade bank at HSBC, are seeing increasing demands for contract monetization, milestone financing, unbilled receivables, extending the range of what we do today quite fundamentally.
Now, as we see B2B e-commerce skyrocketing, what groundbreaking changes are we witnessing in cross-border business interactions at the moment?
The average seller on an e-commerce venue still does not have access to working capital at competitive rates. And that's because we as an industry haven't yet cracked the challenge of how do you integrate with the platform, how do you build credit decisioning with new data fields coming in, and how do you onboard digitally. And we're putting a lot of time and energy at HSBC to crack this, but I think that's going to be the next shift, is giving sellers access to working capital based on the sales performance on platforms.
And how is the digital revolution transforming the age-old practices of global trade, and what exciting innovations are on the horizon?
The digital revolution in trade has been slow. If we were sitting here a few years ago, I'd be talking to you about blockchain and distributed ledgers. The reality is today in 2025, we still touch a lot of paper. Now, that said, I'm filled with quite a lot of hope. The ICC Digital Standards Initiative is making a step forward. The adoption of the UN Model Law for Electronic Transfer of Records, or the UK Electronic Trade Documentation Act, means you have a legal framework. So it's highly likely it's not going to happen overnight, but in the next 5 years, you will see digital trade. And it's important not because it takes paper out of the ecosystem. It's important because it gets the data in one place. So I think the ADB estimates the trade financing gap to be over $2 trillion. This is a large number of small companies who don't get access to timely financing. Data sitting in one place means we can solve that as an industry, which will be good for economic growth. It'll be good for the economies we're in.
Final question for you this morning, Vivek. What is the rise of private credit transforming trade finance into a sought-after asset class, and what unique opportunities does this present for investors looking to diversify their portfolio?
So trade finance, I'm biased. Trade finance is an incredibly attractive asset class. It's orthogonal to many other risks. It's short-term. It's self-liquidating. So there's obviously a lot of private credit demand for this asset class, but not enough access. So we at HSBC are delighted that in Sibos we've just announced our first trade fund, the Trade and Working Capital Strategies. It's initially a note structure that gives institutional investors access to trade assets. And as more banks start following the same path, I think private credit can get access. But there is demand for trade assets. There isn't enough supply.
Well, we've been delighted to have you on Sibos TV this morning, Vivek. Enjoy the rest of Sibos 2025 here in Frankfurt. That's Vivek Ramachandran, Head of Global Trade Solutions at HSBC.
Thank you.